What trade war? Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of July 9th, 2018. I'm recording this on the 7th on Saturday, enjoying some time off here at the Oregon coast. It's beautiful. Hope everybody had a great 4th of July celebration. If you do celebrate the 4th of July, if you're in the United States. So I say, what trade war? Friday, the sanctions against China and their retaliatory sanctions against the U.S. went into effect, and the market seemed not to notice it. Had a small rally, in fact. S&P 500 up 23 points, almost a full percent, and the Dow up about 100 points. So we'll see how things open on Monday, whether that continues or not. But I did want to point out a pattern that I've been tracking and talking about over the last couple weeks. And I'll get my pen out here and draw it. And this pattern really is playing out. And we had talked about a series of high, there's a high, a higher low, a high, a higher low, a high. And about here, when we started seeing a couple price bars come down, I said it looked like this pattern is going to continue for a while. And these moves were very similar in terms of the price that they moved and the time that they took to move. And we said it looked like it was getting ready to come down to another low and probably find support right at the cloud. Well, that's exactly what happened. And now it's headed back up. And the real question is, will this pattern continue to play out in this kind of ragged uptrend? Here in the S&P 500 is the daily chart, represents a very broad part of the market. And really the key thing to watch is this price level, this high. If we go through this high, which we're pretty close to, then this pattern is going to be continuing. If it finds any kind of resistance and begins to reverse, then it may be breaking down. And in terms of an exact price level there to watch really close, I'll draw a line there so we can see it. And that's right at 27, 93 and some change, right in that range. It may not be to the exact tick, but if we see price start to reverse and then head back down, we're probably going to then start a whole different pattern, maybe come down. We can see the cloud is narrowing, which is predicting out in the future weaker support. So we'll have to wait and see, of course, as always. But this pattern did play out as expected, came down here, found support. It is heading up. Again, we're going to watch this key level and see if that pattern would break through and continue on for the near term. I'm a news junkie, of course, and I read all kinds of articles. Here's a good one that you might want to read. It's On the Street, Real Money, written by James Revshark Depor, and the headline here is, Should You Worry About a Bear Market? And he makes some really, really good points in here that it's really hard to call the top of any kind of market. But here's a quote in this article, and you might want to go read it. You probably can't see it clearly on your screen. But he says, the traders that make great timing calls are simply reacting to conditions as they change. They don't try to pretend they know what is going to happen. They just acknowledge the current reality and act upon it. That's something I agree with, and I've been talking about, that we trade the realities of the market. And even though we may be worried, we got a trade war looming. It's actually already started. That's what actually, just the hint of it is what caused this huge drop back at the beginning of the year. Now it's a reality. The market's going up. So we worry that, man, there may be a big correction coming. We're 9 years into an amazing bull market. But we trade the current realities of the market. Trading based on what we think should happen can cost a lot of money. Trading what actually is happening using disciplined risk control has been a profitable strategy here at FollowMeTrades.com. So we're still long several positions. We've got a couple shorts as well. But we're trading the realities of the market and trading according to what it is doing. Now, certainly this has been a difficult market, and the cycles have been a little bit shorter. That's okay. We just adjust and trade accordingly. Let's go ahead and take a look at gold and oil as we wrap up this update. Gold first here. Gold's been difficult, and you can see on this chart, it's been a wild ride for the last couple of years with big swings up, big swings down. This year, it looked like it was going to head off into a rally, and then, of course, failed completely, put in some new lows, took out a major low from late last year. Looks like it's finding a bottom. This is still in a downtrend, low, lower high, low. So for now, gold is in a downtrend and very difficult to trade. Oil is always difficult to trade, but it can be rewarding if you get it right. we had seen this big move up, up into the $73 range, a pullback here. This is an Elliott Wave 4. The ideal pullback would have been in between these two blue lines, but it was pretty clear, an ABC down and close enough to be called a Wave 4. And then now the next impulsive wave up, and it looks like the target on oil is going to be up over $80 on a technical Elliott Wave analysis. Now, it will be volatile. It won't go straight up. You can see this whole move up was marked by pretty dramatic swings, and that will probably continue. The last couple of days we're pulling back a little bit, so we will definitely probably see higher highs, higher lows, higher highs, higher lows on its way to that target. So a quick recap on the S&P 500. What we're looking for here is, watching really carefully, is whether this pattern of higher highs, higher lows is going to repeat, or whether it would fail at this high. So watch this level, about 27.93, pretty close. And if it reverses, then we could have a whole new pattern forming. If it breaks through it, then the pattern is going to continue and go on to some new highs. And again, shorter time frames, those are very tradable moves. All right, hey, thanks for tuning in, and we'll catch you next week. As always, please send your questions, your comments, your feedback. Love to hear from you and respond to every single one. Thanks.